This week we had two interesting movements in crypto. We had the extreme dump of the Pump token. We covered this extensively on this channel. And we had the rise of Ethena, or the ENA token. The question is, how much higher can ENA go? Let's have a look at some on-chain metrics. Let's have a look at the usage of the protocol, and let's see who's actually buying and selling here. Because this is Ethena's price movements in the last month. We went up by 123% and are currently at 57 cents per token. And so at first glance, it seems to be a no-brainer to buy Ethena. The momentum is positive and also the usage of the platform is going up. Have a look at the total value locked. So this is how much capital is currently in the Ethena protocol. We are at 7.4 billion and we are rising very, very quickly. But here's the problem. All of crypto is currently going up. So there might be zero change in the usage of the platform. If the tokens in general appreciate by 10, 20, 30%, then the total value locked or the capital on a chain or on a protocol is increasing to the same degree. So instead of looking at Ethena's total value locked in US dollars, it's probably better to look at this measured in Ethereum. And then we get a chart that doesn't look as positive. We were peaking at the beginning of April at 3.3 million ETH, and now we are below 2 million ETH. So we went down by a third roughly. The fundamental question I always ask myself when buying any altcoin is, do I get long-term outperformance over Bitcoin, Ethereum, and Solana? Because that's in the end the benchmark, right? The safest of the assets are those three. If we take on more risk by buying something that's smaller, we should get that additional risk compensated. And so have a look at Ethena relative to Ethereum. There's a lot of volatility, but over the long term, we tended to see an underperformance of 35%. Despite the long-term growth chart of the protocol. Here's Ethena relative to Bitcoin. That underperformed even more. We are looking at minus 58%. And so that's a problem, right? We can simply just buy Bitcoin and we are better off compared to buying Ethena long term. At least that was true in the past. Will it be true in the future? And what actually caused this underperformance? The underperformance is caused by the same thing we see for most altcoins. It's an expanding supply. As in, over time, there are the early investors that get token unlocks. There's the team that gets token unlocks. And if the supply is growing faster than the demand, then the relative valuation is likely going down long term. And so Ethena started out in April of 2024, so a bit over a year ago, with 1.5 billion tokens. Now we are at 6 billion tokens. So the supply 4x'd. And so we can grow a lot in the protocol. We can have a huge success. It doesn't matter when the supply grows that quickly. Bitcoin still outperforms. But let's have a look at the on-chain metrics. Let's see who's actually buying Ethena and potentially stabilizing the price. Because relatively speaking, right, compared to what's currently floating around, the token inflation isn't as bad anymore going forward. We had our 4x in token supply expansion, but now that we are at 6 billion, it will take almost 2 years until the supply doubles one more time. And so currently we've got close to 72,000 holders on the Ethereum chain. Now, not all of those holders are created equal, right? Some of those wallets might hold just a few cents worth of the token, while others might hold hundreds of thousands of dollars worth of the token. So we have to dive deeper. What we are seeing on the left is the number of retail investors. What we see on the right is the number of whale investors. The way we make this distinction is by looking at minimum holding thresholds. How many tokens are held in a particular wallet? So while Etherscan counts every single wallet, this chart here on the left only counts wallets that hold at least 1,500 tokens. That's a bit under $1,000 worth of the token at current prices. In the middle, it's 15,000 tokens, so a bit under $10,000. On the right, it's a bit under $100,000. We see accumulation across the board. All wallet cohorts are buying Ethena at a quite fast pace. Since the whales matter the most, right? The wallets here on the right are 100 times more important than the wallets on the left. Let's check out the growth since beginning of the year. So this went from 400 to currently 650. That's an increase in the number of whales of 62%. The supply since the beginning of the year roughly doubled. And so that then explains the underperformance, right? Why Ethena did worse than Ethereum. But let's assume that the rate of accumulation will stay this way. In 12 months, the supply will grow by roughly 50%. And I think there's a good chance that we will be above 1,000 whale wallets 1 year from now. So fundamentally, it's a struggle of supply and demand, obviously, and the supply is growing quite fast, but the demand is growing quickly as well. And since the supply schedule, relatively speaking, was very aggressive in the early days, we saw an underperformance, but it's going to be less aggressive going forward. And if the demand doesn't slow down in the future, then we might finally see the ENA token outperform Bitcoin and Ethereum. There are, of course, short-term price distortions as well, and that's through the leveraged bets on the price. Because on the spot market, we've got most trading volume on Binance with 369 million worth of trading volume in the last 24 hours. But we've also got some activity on the perpetual futures, 280 million. It's less than on spot, but still it is a relevant number. Most perpetual futures traders recently tend to bet on rising prices of Ethena, and there is a strong correlation between the open interest and the Ethena price. So as there's less bets on the price, on the perpetual futures, the spot market also tends to go down, and currently we are at historical heights of open interest. So short term we might be quite heated, unfortunately. There's also a lot of correlation between the trading volume of perpetual futures and the ENA price. And again, we are very, very high currently in trading volume. So the long term looks healthy, as in there is accumulation and the tokenomics aren't too bad anymore. But short term, this rally over here is at least partially caused by leverage on the perpetual futures. And so the best is probably to wait for some kind of a retracement and then buy that dip. Because we want to buy solid assets that we can hold for the long term whenever attention is low and trading volume is low. Long term, I do believe that Ethena has a good chance to outperform, again, because of supply and demand. Short term, there is quite a bit of risk. And the risk can be quantified, right? The potential drop versus Ethereum is 34-35% roughly. A clear shift in crypto has happened. Bitcoin is close to the all-time highs, yet the interest, the search interest, the retail interest is very low. Bitcoin gets supported because of Wall Street purchases, not because of purchases by retail. Nobody is searching for crypto or for Bitcoin anymore. The market is consolidating. The capital is concentrating towards a few winners. That's usual in any market, right? The vast majority of assets, the vast majority of players tends to go down, and there are a few winners. The winners take most. What we see over here is the performance of the smaller altcoins in the last year. And Bitcoin doubled in the last year, but most altcoins went down. And here's the thing, most people try to find the few assets that still do okay. They try to find the next Dragon coin or the next go-to. But how likely is it to get proper allocation to those assets and not pick any of those other red assets and burn all the capital? The odds are clearly against us. So this approach is clearly problematic. It's not easy at all. The approach of timing the macro environment is also not that easy. This is Bitcoin over time, right? And of course, it does make sense to buy Bitcoin after it has dropped 70 or 80%. That's the best time to get in. We are very far away from this, unfortunately. The issue is also nobody wants to buy when we are depressed, because there's always a convincing story why Bitcoin will go to zero, why crypto is doomed, while nobody will get into the market again. We are far away from this, but in general, right, riding the macro is also not the easiest. Trying to find the next 10 or 100x altcoin is a problem. Trying to buy Bitcoin when it's extremely depressed is also not that easy. But I do think there is an approach that's comparatively easy, where the odds are actually in our favor, not against us. That's by using the market structure to our advantage. This market structure here, right, that all of the altcoins go down all the time. Why do they actually go down? The answer is token inflation, right? It's new tokens that hit the market. It's the insiders, it's the venture capitalists, it's those paid influencers that get tokens, that maybe get them unlocked over time, that then simply just dump on retail. That's why all the retail investors lose over time. They simply get dumped on by the smart money. Why do venture capitalists like Andreessen Horowitz like crypto? Why do they invest in it? They do this because they get into the projects very early. They've got a very tight network. They've got a lot of capital to play with. They get in early and then they sell off and dump on retail. Or why are there so many compromised influencers that take money or tokens of a project to promote a certain cryptocurrency? This here, for example, is BitBoy Crypto, right? A dedicated review. He he asked $35,000 for that. The reason is simply conflict of interest. It's profitable to do this. I, by the way, never took any money from any crypto project. I also will never take any money from any crypto project. I want to make my money in crypto in a different way. And that is through building skills that help us to distinguish the noise from the actual signal. And again, it's all about taking that market structure to our advantage. There is a way to make money with it. When a token like Balancer inflates in supply, when the supply is growing and growing because the users of the platform get tokens, because the early investors get token unlocks and they dump on retail, when something like this happens, then as a consequence, the token of course does worse compared to Bitcoin, Ethereum and Solana. So this is now Balancer relative to Ethereum, and it just constantly is going down. But we can just flip this on its head. When we go long Ethereum and short something like Balancer, we see a chart that's not possible to achieve with any single bet on crypto, right? This is very little volatility and very constant growth. This is now a linear chart. Here's the same on a logarithmic chart. Balancer is not a cherry-picked example. The overall altcoin market works like this. This is the unlocks over time for all of the tracked tokens on this website here. So the website is Tokenomics.ai. This is the weekly unlocks across all the tracked tokens, and it's above 600 million per week most of the weeks. So if there's not at least $600 million coming into the crypto space in a particular week, we see the altcoins do worse than Bitcoin, Ethereum and Solana. This is how those kind of charts develop. This is why we see red everywhere. This is why the strategy works so well. Again, instead of trying to find the needle in the haystack, it's much better to bet on the overall structure. When most people cash out, when Andreessen Horowitz makes money by dumping on retail, why don't we just get ourselves on the same side? I'm following this strategy for almost 4 years now. What we see over here is in light gray the performance I would have gotten had I just dollar cost averaged into Bitcoin. But instead I did the relative valuation plays that I just described, and that's why I got the black line return. So this comes from an Excel sheet of my personal portfolio. This is monthly data and it's got now 45 data points roughly. I started this strategy with decentralized finance, so with borrowing and lending platforms like Aave or Venus Finance. But recently I do this with perpetual futures. So this started 2.5 months ago. I started with 40K and now it's at 60K almost. So that's almost 50% return in less than 3 months. I do not think that this will continue forever at that pace, but I do think in general this is a money-making strategy. The strategy has already worked for almost 4 years and it also works with leverage on the perpetual futures. And so basically we just flip this thing around, right? Everything that's red over here becomes green. Everything that's green here becomes red. The odds are finally in our favor. We are not gambling on random meme coins, lose everything. Instead, we make money the same way how the insiders and the venture capitalists make money. We make money when the dumping happens. And so I understand the problem, right? If you followed other people like BitBoy Crypto and you trusted them and you've lost your money with them because you just followed whatever they said, then I do understand if somebody else comes along and says, follow my approach, that it makes sense to be somewhat skeptical. And so I was thinking about this. How can I prove that I'm very certain that this actually works? Here is the offer. Watch 2 tutorials in the premium membership. So this is one of them. It's half an hour in length, how to use perpetual futures on Hyperliquid to bet on relative valuations. And then there's the second video over here, which is at least equally as important. Risk management with relative valuation bets using Hyperliquid. If you don't know how to manage your risk, you've got a big problem with those instruments. But yeah, the offer is to just watch those 2 videos. Once you've done this, then I don't expect you to start trading by yourself already and find the best opportunity. This is only something for the people that have been around for a while. This is, by the way, a few trades that have been made by other members that are shared over here in the chats. I think it is much better to do a little bit of hand holding, as in I will share my favorite trade that you can enter with that strategy. So you know how to use the platform, you know how to set up the positions. I will share then what asset I believe has the most likelihood of performing in the near future. You will then enter the position, hold it for a month, and if you don't make any money, if you're actually in the red with that position, I will simply refund the premium membership for free to you. You don't have to pay anything for premium if you're not making money with that first trade that I'm sharing with you once you enter. Of course, besides that very first trade, I'm also sharing all the other trades that I opened. This, for example, was WorldCoin. WorldCoin has terrible tokenomics as well, and it underperformed Ethereum very consistently. But one thing after another, let's do the simple stuff first. Let's set everything up. Let's open the first trade, make that first profitable trade, make the first gains, turn ourselves around from being a constant loser to actually start winning. And then we can take it from there and become a bit more complex along the way. The premium membership is currently $125 per month. But again, I'll refund this in case you don't make money with that first trade. A link to premium should pop up directly over here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.